Stocks fell Friday after President Donald Trump tested positive for the coronavirus. Initially, the three major indices sold off on the presidential news, but pared the losses when it came out that the president was only experiencing mild symptoms. Additionally, the jobs report for September showed the economy added over 660,000 new positions last month, but this was below Wall Street expectations and strengthened the belief that the recovery is losing steam. And as we all know, it's not the economy, it's not the fundamentals, it's the stimulus handout, stupid. So, will the jobs report add to the urgency to enact a new stimulus bill ahead of Election Day? Well, with talks mostly stagnant, don't hold your breath. And in other news, there are reports this week that checks for unemployment from the Department of Labor have begun to bounce because the government didn't replenish the accounts. If that isn't a sign the U.S. is bankrupt, I don't know what is. In other news, small caps exploded higher and had their best week in 2 months while the NASDAQ lagged. But keep your eye on the NASDAQ, as the monkeys seem to be fiddling with the VIX. So let's take a look at the charts, beginning with the VIX. And we're looking here at the 2-year weekly chart on the VIX, and the symbol is $VIX, as you can see in the upper left, and we're using stockcharts.com. Now, as you can see here, the August to September period, that was kind of the bottom in the recent few months. It didn't want to go below that level of 20, and now it doesn't want to go below that level of 25. So keep your eye on it. Looks somewhat like a cup and handle performing right here. So it's very, very dangerous. And you can see that down here in the MAC where the fast line really wants to go through that slow line. Very stubborn, but it's right there. It looks like it could go through at any moment. Up here in the upper portion of the chart, you can see the RSI. Again, we're right at that midline or 50 level, and this line wants to head on up. So it's just looking for a reason to erupt. So be careful. You have time. Reposition if you need in your portfolio. Don't do any major selling. This is not the time. But do any sort of reallocation that you think necessary to prepare for a sell-off. All right, let's now go to our charts. And we're now looking at the 2-year weekly chart on the spiders, the SPY. We're using the 2-year to match up with the VIX chart we just looked at. Now, from that top here, you can see we came on down right near that 20 EMA, and we're getting that little bit of a reflection that I've been talking about. I've wanted this to carry up higher, but there's not a lot of energy behind it. We are getting the reflection, at least in the price chart, but the fact that we don't have a lot of energy should be a sign of problems in the market. Not much from the volume there. Here into the MAC, you don't really see the reflection in the MAC with the fast line heading on back up, but you see it in the price chart. Now, the fast line in the MAC wants to head on down, so there is a lot of pressure to head down. So there's kind of a battle going on. Moving here into the histogram, you see pretty much the same thing. Here in the price rate of change, you can see that the fast line came through and it's coming up from under, trying to get back through the slow line. And with the lack of energy, that's going to be difficult to do. Here into the RSI, this is kind of the problem we've been looking at for a long time, is this downward trend line from those peaks. We need this to move up and through, and I'm not sure if it has the energy, and that's why I'm saying that's one of the big danger signs. Into the stochastics, a bit of a turn, not much. We'll have to wait another week or so to see if this starts bending and heads on up again, but it's getting pretty low here. The further up, such as in this area here, the easier it is. The further down this goes, the more difficult it is to turn and change and head back up. And I'm not sure if we have the momentum. Same thing here in the Williams. You can see this is below that 50 line, so this is indicating even more weakness. Back on up here to the price chart. Let's just sit on the sidelines. Watch this reflection happen if it does. because the danger level all the way up through to this point here is very high, and I'm not sure it's going to be able to get through it. So be patient. Those who are patient will reap the rewards. And for today, that's ChewDog Charts. Thank you.